Timing is always difficult. And, people say if you're early, you're wrong. Depends on how big your call is. If you're going to say, look, NVIDIA's going to drop 10%, and then a year later it hasn't, then you're wrong. In 2002, I wrote about 5 pages as to why the banking system was going to collapse. And I was 5 years early, but one prominent blogger named Paul Kudrowski made the if you're early, you're wrong statement. And I sent it to him. I said, was I wrong? He said, no, you were brilliantly correct, because it's a big enough call that being 5 years early doesn't matter. So I don't know when regression of the mean is going to occur, but the fivefold, 150% overvaluation is based on a pile of metrics. What I've discovered doing podcasts and reading comments and stuff is people don't understand what a valuation is. The cluelessness is actually rather staggering. They go, well, we're going to debase the currency. I go, it's still overvalued. I don't care. That when you have a valuation, it's the price divided by something that should track it, meaning they're both inflation sensitive, the numerator and the denominator. So if it's price earnings, price revenue, price to book, everything, both of those are sensitive to inflation. So you can't debase away an overvalued market. So I've been trying to come up with the magic way of saying the consequence of being 150% overvalued. And let's take a round number. There are stocks out there priced with a PE of 100. Turns out the triple Q is priced at 100. You go, no, it's not. I've looked it up. It's 23, 24, 25. Turns out the way they calculate it, it's a fraud. And Horizon Kinetics went through it and said, here's what they're doing. Here's the fraud, and here's what it really is. And it's 100. So if you're priced at a PE of 100, you're priced to earn 1%. It's just that simple. Think of it as a bond. Now, you say, oh, yeah, but the triple Q is a bunch of growth companies. So I say, okay, let's be optimistic. Let's say that the triple Q doubles its earnings. Inflation adjusted doubles its earnings, right? Not just the money supply increases and therefore you gain nothing. I'm talking a real doubling of earnings, which would be heroic, right, for these 100 tech companies. Now you're priced to earn 2%. And so let's say, well, they double their earnings again. Well, now you're priced to earn 4%. You're priced to double them again, or you're priced to earn 8%. And so you realized you could increase earnings 8-fold in that, and the triple Q is still not that cheap. And they say, well, but inflation will take it up. I go, but you're earning nothing when inflation is doing the lifting. And the valuations account for inflation. Price divided by something, both of which inflation change with inflation. And so I find that the people who don't understand this basic idea of valuation, the number is staggering to me. The financial system is the beast. Okay. This thing that just devours money. Everyone talks about Powell being a swamp creature and that he'll just do what every, central banker does, and that is feed the beast, right? And so when the beast demands money because it's dropped 10% and we just cannot tolerate that, that sort of thing. Once the real selling starts, the system becomes an emergent system, meaning that it's not mathematically predictable. Emergent system is sort of a chaotic system. And so the rules get thrown out. You think, well, it's got to stop now, but it's got a mind of its own. And I think we'll get into that mode. Again, for years now, I've been emphatic about how duration risk is much greater than price risk. And I used to just call it time. I think it was Paul Singer who said duration. And so I said, okay, I'll use Singer's language then. I think we're saying exactly the same thing. And that is that time kills you way more than price. So if the price dropped 50% today, we could dust ourselves off and start over and do that. If it takes 15 years to drop 50%. You've not only given up 50%, and this is inflation corrected. Everything I say has got to be inflation corrected. I know nominal, but you're not making any money when you're making it nominally, right? So that's back to the ignorance of the masses not knowing what a valuation is, not knowing everything should be inflation adjusted. One time I sent an email to Lacey Hunt. He adjusted for per capita. And I said, it's great to adjust for per capita because the market gains over the last 100 years, you have to correct for the fact that the population is 4 times bigger. You have to correct for the fact that the world is feeding off this big, pizza pie, not just us. So we're sharing this booty with way more people, and therefore, on a per capita basis, we're not as rich as we think. But the point being is, I think the correction, which I define as correcting both price and attitude, because as long as the dip buyers are happy to be dip buyers, we haven't corrected anything. Correction inherent to the word is that it actually fixes something. And if you drop 20% and a year later you're back up, you fix nothing, precisely nothing. And so you have to change investor attitudes. And the way you do it is you knock them down and they get up and they get back in the game, and then you knock them down and then they get up and they get back in the game. And so it's a prize fighter who by the end of the fight is punch drunk. And then you have finally whooped that guy's ass. And so I think this next correction is going to be 3 steps back, 2 steps forward. And its best model, again, historical models are dangerous because history doesn't repeat. If we drop tomorrow 30%, how many people would be uncorking and buying all their favorite, buying NVIDIA, buying you name it, right? Crashes don't correct anything. Unless we get one like the 1929 to 33, then you take it down to 90%. I'll buy a 90% drop. I see 2008 without recovery. They spent $30 trillion. pulling us out of that. I don't think they can do that again. It's the Nikkei. It's the U.S. 1967 to 81. 14 years. Nominally, you treaded water. In real dollar terms, you lost 70%. Losing 70% is a bitch. Taking 14 years of your life. How many years of investment lifetime do you have? I'd say 45 years. You're a kid for 20. You're a defensive old man or old woman for the last 20. So you got about 45 years of investing. Probably you only make money in half of those years. So to burn 14 years losing 70%, like we did from 67 to 81, it's not just the loss, it's the fact you went from being 35 years old to 50. Well, we're years from the finish. How's that? So we're already getting gutted by the inflation. So our debt's going up 7%. GDP, inflation corrected correctly, grows over the 20th century, grows around 2.2%. People think it's higher. They grew 5%. No, not even close. Ask Howard Marks. Ask guys who are that smart. It's in the very, very low 2. Some say 2.0, not 3.5. And the growth in the GDP really is operationally the gain. Except for, I kind of mentally break your gains into two pieces. If you owned a gas station, whatever you earned at the end of the year, you pay yourself. That's your profit. So those are the dividends. If for some reason you're growing a chain of gas stations, those are the capital gains. So I think that if we have no capital gains between now and 40 years from now, we will be at historical normal valuations. Meanwhile, all you got were dividends. What's the current dividend rate? 1.5%. Now, I say the market's, 150% overvalued, call it threefold, fourfold overvalued, whatever you want. Dividends through the 20th century averaged 4 when things were cheap. They were 6. So if you use dividends as a valuation metric, you say, look, they were paying out 6% then, they're paying out 1.5% now. You're threefold, fourfold overvalued. I'm about 10% equity, so my equities could go to 0 tomorrow and I'd have a bad day. A lot of gold. I have some gold mining stocks. The gold miners are widow makers. I was buying gold from 270. I was buying it actually from 290 down back in 99. And I finally said, look, I can't take any more pain. The Nasdaq's going straight up. Gold's been dribbling down. So I bought all my gold between 290 and 270. And then it started its trek up. And I actually spotted the indicators when the Bank of England said they were going to sell more gold and the price went up, not down. And then they actually sold some and the price went up, not down. I've told the story a million times. I was on Cornell Economics Report. I told them that. I said something has changed. The Bank of England is no longer jerking the price of gold down despite their best efforts. That became named the brown bottom. But I didn't, I had friends when gold was at 310 or 320 saying, oh, you should sell. It's at a high. And I held on and then I bought it about 457. I remember a fateful day when some guy told me it was a top, and I told him that he only had 4 guys buying gold from him and 3 of them were my friends. And then it got to 1900 and I thought I was king, and then it dropped back to around 1,000 and it sat around 1,200 for a while. And I bought another wad at 1,200 when it looked like it had gotten boring again. And that turned out to be, for a while, it felt like just dead money. But if you look, you go, that was a pretty good call. It was, sort of a doubling, a little more than a doubling in about a decade. And if that's not enough for you, you're too greedy. You're going to lose a lot of money if that's not adequate for you. The miners, by the way, during that first bull, during that noughts, the bull of the noughts, the miners, gold went from 256 up to, stabilizing at 1,200, right? Through 1900. The miners gave it all back. I have to have gold in my portfolio. I'd really rather own equities, but they're too expensive. So I like having gold now because I think there's a pretty decent chance that the euphoric gold bulls are going to be correct. And I don't know what's going to tell me to finally get rid of my gold. Possibly nothing. But Jimmy Rickards used to talk about gold. If you priced it according to some historic something or other, gold would be $49,000. I go, yeah, but we're not going to get the $49,000. Not without the dollar going to basically Zippo. I do think the next few years, the enthusiasts could be rewarded. The end of the American experiment, period. We've had a 250-year run. The biggest threat is it's over. Now, we have resources. We have inland waterways. We have a fairly educated population. But we've also had a fairly free society. And if the society clamps down, and I see all sorts of indicators, for example, my hatred of the Biden administration is the weaponization of the justice system. All the other things they've done are bad. I think he's been a grifter his entire 50 years in politics. All that aside, when they weaponize the justice system, and it's not just weaponized against Trump, it was weaponized against Daniel Penny, it's weaponized against anyone within 100 miles of Trump. Peter Navarro does 4 months in prison. He's just a former UC Irvine economist. He finds himself in prison, and next thing you know, Sidney Powell, Michael Flynn, these guys were all looking at hard times. And you can say, well, no one's above the law. And I go, well, apparently Biden is. Apparently the Democrats are. And what they don't understand is that the great risk is that when the power switches, we'll turn on them. And I have a mixed emotion. Let's say Trump gets elected. One side of my brain says move forward. The other side of my brain says hang some of them. I think Merrick Garland should be brought in front of a grand jury and tried for treason. I think Mayorkas should be brought in front of a grand jury and tried for treason. And I can make the case. It might not be formally the definition of treason. Treason is a complicated word in a legal setting. But skanky, treasonous by design. I think anyone who knowingly let 4 million people a year race across that border, regardless of how dangerous they are, is not in any way, shape, or form supporting the American system. I'm not against immigration, but that policy has so much potential to truly destroy us. And so if we have to, I'd say just shut the borders down, period, QED, right now, down to zero to get control of that situation. If you were some foreign country that you're sitting there going, okay, what is it like being our ally? Well, at one point we're doing okay with Gaddafi, he's not dead. At one point we're doing okay with Saddam, he's not dead, right? Being our ally is dangerous because the minute you're not our ally, we cap your ass. We destroy your country. And so all of a sudden we weaponize the dollar. We said the absurdity of this. So there's all these Russian companies of which the world had part ownership of. And we declared them, you were not allowed to own them. What did we just do? We handed all those companies back to Putin. I had some RSX. We handed it back to Putin. He now owns those companies 100% again because we refused to own them. That's insanity.